Hi, everybody. This is John Seroka. Thank you for joining us today. And let's just give it a couple more minutes because I still see the attendee numbers clicking up there. So let's give everybody a chance to join us today. We've got a really great topic, as you know. So bear with us just a couple more minutes. All right, let's get this started. Hello, everyone. Again, I'm John Seroka with Seroka Brand Development and the Mortgage Innovation Committee co-chair. And welcome to our webinar today about how to tune your tech stack for full throttle ROI. But before we get started, I'd like to thank our Mortgage Innovation Committee sponsors at Accelerate. Are you looking to close more loans in 2021? Experience Accelerate's award-winning customer engagement platform featuring lead management, CRM, call routing, sales enablement, marketing automation, borrower engagement, and data intelligence through innovative use of multi-channel marketing, including text, social media, email, direct mail, phone, ringless voicemail, retargeting, and so much more. Accelerate, helping lenders close more loans through better borrower engagement. Schedule your personal demo today at www.accelerate.com. That's INSELLERATE.com. All right, and now for our topic today, our goal is to show all of you how to tune your tech for full throttle performance that delivers the ROI that you expect in terms of improved processes, a better customer experience, and improved profitability. So we're going to cover defining the ROI expected from each tech investment, measuring the impact of your technology, enhancing the customer experience, getting employees behind adopting tech, and training them on it. So with us today, I am thrilled to present to you Chris Gassel of LBA Ware and Stephen Bennett of Mutual of Omaha. So as we go through this, please submit any questions that you have, and I will be paying attention and I'll direct them to the right individual as they come in, or you can wait until the very end at the Q&A when the Q&A time starts, and we can do it then too. So with that, I will flip it over to you, Chris.
Awesome. Thank you so much, John. Appreciate the intro, and thanks everyone for spending a little bit of your late afternoons with us, early afternoons, depending on where you are in the country. So with that being said, let's just go ahead and jump right into it. All right, Stephen, this is where it gets fun for us. The first bullet point I want to talk about, defining ROI expected from technology investment. So obviously it's a very broad bullet point item, right? But I think the critical items are saying, as you're looking to incorporate something that's going to better your business, what are some of the key takeaways as you're doing some evaluation or like a business case study as you start to, I guess, look at how you incorporate potential new items that would just overall help your business?
Well, that's a big, broad question, but let me start by saying good afternoon, everyone. And Chris and John, thank you for inviting me to participate and share my experience, right? I can tell you, a little bit about my background and how we approach things at Mutual of Omaha Mortgage in terms of analyzing technological investments and fitting those into our business needs. First, a little bit about my background. Prior to getting to the mortgage industry, I was an IT manager and program manager for a large engineering firm in DC. What I did was run IT organizations, engineering groups, etc. So IT is near and dear to my heart. It's critical to creating advantage for an organization and certainly meeting needs. So how do we measure? How do we establish a return on investment? What do we look for when making investments? I'll start with that, and I'm interpreting and paraphrasing your question, Chris. So feel free to correct me if I go off track. I tend to do that on occasion, as you know. So return on investment in technologies sometimes is pretty clear, pretty mechanical and quantitative. Sometimes it's not so easily quantified, right? There's subjective values. There's hard to measure values. You know, maybe a new technology helps you drive your culture, or because we've not bound the concept of technology, right? There's many technologies, human resource information systems, commission management systems. There's technology that enhance our manufacturing, I shouldn't say manufacturing, our business line processes, such as a simple nexus or a loan origination system, pricing engines, tools like that. So not all of those directly affect financial revenue streams necessarily, but you know, it's important whenever I approach anything of this nature, whether that's it doesn't matter what the technology is. Whenever I approach it, I always take the same systemic process. You lay out your business requirements, right? Because oftentimes we see organizations look at technologies because they're enamored by the buzz, because there's a lot of talk about it, but they don't really have their business requirements ironed out first, right? Because your return on investment starts with what your requirements are. So laying that out, getting everybody to buy into it, and organizations are very different. I'm going to step back a little further. I'll say a little something about Mutual of Omaha Mortgage and my role at Mutual of Omaha Mortgage. I think it's very important as I share this with you. I point out I am not the CIO. I am not the only person involved in technology rollouts within our companies, and that's pretty normal for a large organization. You may have pockets and groups, functional areas that may investigate technologies to roll out. So our organization is somewhat dispersed, and we certainly have technologies rolled out by functional groups. I think we're pretty good at coordinating most of the time, and this may be something that other organizations are familiar with. Where I come from, when I was in the IT industry, we were very centralized when it came to rolling out technology. We had governance boards, and we reviewed plans and proposals as a group. Not all companies can operate that way. But now that I've shared a little bit about that, you know, I lay out my business requirements. I start looking at the technologies, alternative solutions. Once I narrow down solutions based upon those requirements and dig into them and do research on them, I start working on a schedule, start working on what the value propositions are, whether it's going to lower our costs, what's going to lower it more. So you always look at cost, technology advantages, the value proposition, if you wish. I'm going to be able to do this faster, the efficiencies that it could create, etc. And you lay those proposals out and you compare them side by side if you have more than one alternative. Or this is what I do if I have more than one alternative. And then from that, I look at schedule, value, and cost. And I make a recommendation. So that defines how we go into implementation and measurement later on. Did that answer your question in a long-winded fashion?
It did, but your response actually makes me think of some other questions. You brought up culture. I found it really interesting that you would even evaluate something that would bring culture into the equation. So when I say that, does that mean like culture as in making things easier across the board for like originators or operations staff or C-suite? What exactly do you mean when you say you're evaluating culture and ROI dependent upon what the solution it is you're looking at?
Well, there's a couple reasons your culture matters, right? So, I can tell you about our organization. Our organization is very sales focused, right? So that's going to get a priority in a lot of the projects. If it benefits sales, does it benefit sales? So, picking your time to invest in technology advancements depends you're going to get better buy-in and support if you're picking projects that meet the demand and desires of the organization as a whole. And how your company views and works together makes a big difference. That part of culture makes a big difference.
You mean like how willing they are to adopt the technology? Because I would think that adopting the technology and actually people trusting the technology, like originators trusting that the technology is going to work, for example, can play a big role, right? So would that be part of the culture of the organization?
Yeah, that makes a difference, right? So if an organization is not really comfortable implementing new technologies, there are organizations that don't like change, right? Actually, a lot of people don't like change. Most people don't like change. Well, let me rephrase. Everybody likes change unless it's they who have to change, right? So,
Exactly.
but to your point, John, I've worked in organizations that are very adverse to technology. They're very averse to the unknown. So that does make a difference as to how aggressive one has to be in the technology selection process. And additionally, is your culture one of organized groups? Are you fractured? Are you communicate well? Can you get everybody on board? And does everybody work well together? Because if not, what ends up happening in many cases is you'll work against yourself when implementing projects, right? One group may really want it, the other group doesn't. So they start, their subterfuge happens. It just does happen. So getting people on board is absolutely critical. And I know that's off topic of defining return on investment, but it's on topic because you have to understand that as a risk in any implementation, because then you develop mitigation strategies, right? So you get people to buy in. Here's my mitigation strategy to the fractured organization. I'm going to meet with all the heads of each organization and try and sell that, or try and at least ferret out whether they think it's an appropriate investment. Then I can come prepared and get their buy-in, and it will help my implementation.
Yeah, I think that later on in the webinar, you guys are going to be discussing how to get people to buy in. I think that's hugely important. But I'm wondering, unless you have another question, if we should talk a little bit about, measuring your next bullet, which is measuring the impact of your technology investments.
I think that's a really good segue. And actually, I was actually going to ask you, John, just because, in your world and what you do for people, how often do you see organizations utilize these tech stack investments in terms of brand awareness and culture and what they've developed as an organization to say, hey, I'm a great place to come work. I'm a great company for consumers to want to drive to because I've got your back in terms of being efficient, tech scalable, and we're basically growing every day.
Absolutely. It happens all the time. I'll tell you what, it's entirely appropriate for me to plug Accelerate because they're a great company. And the fact is that when I get on the phone with lenders and I'm discussing their marketing and the ROI of what they're currently doing, talking about everything that they currently have in place, one of the key questions I have is, what does your marketing tech stack look like? So then they share that with me, and then I can make suggestions to them to help, drive a better ROI, and a couple of key suggestions I have is sometimes they complain about their CRM, or their AMS, and I can make a POS suggestion to them You know, so that, and a lot of times I even say to them, look, you know what, whoever you're using right now, it's collecting dust. And maybe you aren't even aware of the updates to that system because, you know, I'm not an advocate of taking a system that somebody already has and throwing it under the bus, you know, but not by a long stretch, because I've discovered in many instances, I ask them, well, what system are you using right now? And then they tell me, and then they say, but it's collecting dust because it doesn't do this, it doesn't do that. And then I say, you know what? Look, I know the people that own that company. I can put you in touch with them. I promise you, they have had updates since the last time you touched their system. And a lot of times there are updates, and they can you know re-engage with that system and other things like, for example, you know, Sales Boomerang. You know, Alex, great company. What a fantastic opportunity, you know, to allow the technology to let you know when somebody is somebody who was kicked out because they weren't credit worthy, and suddenly they become credit worthy because there's a trigger associated with that, right? And as soon as they become credit worthy, the Sales Boomerang system lets all the parties to the transaction know, hey, you know what, this family, this gentleman, this lady, or whoever, they're back in play. And then that gives the originator and the real estate agent an opportunity to reconnect with that person and say, hey, you know what, we can help you out now.
Right. Yeah.
And
I was gonna say, it's funny. I was literally just talking to Alex about that yesterday on our way back from the conference. But I think what you've said, though, you've teed up a lot of what this slide can do, the measuring the impact, right, of those investments. And you brought up earlier the collecting dust piece. So Stephen, coming back to you, this is a huge thing, right? Because as you create these investments and you want to see people use it, you want to see these technology investments scale with you as you continue to grow, like last year, right? How is it that you measure the impact? Is it simply by ways and means of usage? Is it by, you know, ROI in that sense? Is it by just saying, look, we had a sincerely deep need in upgrade in this scenario, and regardless of, you know, true financial ROI, like you were saying, it's actually helping our process. It's making our lives that much easier. It was still worth it.
Yeah, absolutely. So it depends. Measurement depends, right? So some investments you make, like you invest in an LOS or your mortgage company, you don't really, in the whole concept of buying an LOS, you don't do an ROI. That you buy an LOS because you have to have it, right? So some things you have to have, and you invest in those. And I don't think organizations necessarily do a great job, and mine, from what I've seen, and I know that we could do better in measuring the impact, because they just need it, right? Until they start exploring other alternatives. The measurement of the impact ties directly to the requirements, right? It all starts in the beginning. This whole process is a storyline. You start by identifying a need, right? You look at the need, you craft your need out in statements that are concrete. You get buy-in, you get everybody to agree to those. This is a preferable, optimal world I'm talking about. And from that becomes your measurement. So I want to implement Simple Nexus so that I can get applications out to the end user, so I could talk to more end users and get them the applications, and I can get more applications back. Okay, your requirement is get more applications back in a timely process. How do you measure that? Well, easy enough. You look at the applications you get back. You look at the applications that come from Simple Nexus. You look at your contact to application. That's one measure that would start from the business requirements and move its way forward. My opinion, and I'll state this for the record, everything I state today is the opinion of Stephen Bennett and does not necessarily reflect the opinion of others around me. So, it's just my experience. But you know, everything drives down. So I implemented Compensate, right? That's one of the technologies I implemented at Mutual of Omaha, and they're very clear ROI statements. It's going to save time at the manager level. It's going to, and I'm not trying to use your product as a specific, but it is an example. It improves accuracy, all this good stuff. And that's what I look for. I make sure that it's reducing the amount of time being used, et cetera, et cetera. I implemented Power BI for business intelligence a few years ago at Mutual of Omaha Mortgage. There it was one of those need things. We had a spreadsheet that we were putting everything in. It was kludgy. It was hideous. It was hard to manage. It didn't meet real needs that people were asking for information, but we never really clearly laid something out and did a big analysis. We had the opportunity. This came up. We got a specialty on BI, and so we launched into it, right? But I still measure I measure the value. Are we using that system? And measuring the impact of technology is not a one-time shot. It's a continual, evolving process, right? You put these business requirements and you say, this is what I think it's going to do for us, whether it's going to make us money, save us money, improve our processes, make people happy, introduce us to new customers, or make us look better. So you have to, then those become measurements, right? In some form or fashion, informal or otherwise, that you all can agree upon. They're either subjective or concrete. Most ROI, in my experience, is subjective. For most projects, there are concrete savings that you can look at, but value of technology goes well beyond money, in my opinion. So again, I'm going off topic a little bit. Does that make sense? And does anyone have any comments?
Oh yeah.
I just want to ask one thing, and then John, I want you to hop in too. And you said measure. And I think it's important for everybody to understand this because people do things differently. I think we've said this time and time again, right? Not everybody's the same. How often or how important is it to you to reevaluate those investments over time? Is it something you would remeasure effectiveness quarterly, biannually, annually? Just depends on the solution itself. Like, is that something that's done in the world?
There's your culture, right? What does your culture want? What is your culture going to accept? Right. Some organizations are very rigid and able to control and go, okay, we're going to meet on a quarterly basis. We're going to look at this. This is the mortgage industry. We're a grassroots industry. Most groups don't do that I've talked to. I'm not saying all, but most don't. So we're focused on our specific goals, right? The sales team's focused on its goals, et cetera. It's my opinion that you should always and continually evaluate the efficiency, value proposition of the technologies you're deploying, for no other reason. And I'm sure that happens automatically in pockets, right? You implement Encompass, right? We're an Encompass shop. We're always looking at ways to tweak Encompass and make it better. We're looking at the things that come out and we're implementing these changes. Some we're implementing, I think, because they're changes that are coming out and we just want to implement them and there's not really a big deal about it. We don't really measure it. And some we find business needs, and I know for sure by talking to our Encompass admin that we have measurements set in place to make sure they're working. So how you do it and when you do it depends very much upon your organization. So my technologies that I'm in charge of, and I'm in charge of a few that I've brought to this organization, I continually look at. There are new things that come out. I don't always take those to management, even though I might think they're good for the organization, but everybody's got their hands full, and I recognize I'm not going to get anybody's attention on this matter right now. So that's when that culture, are you all together? Are you working in unison or is it less formal?
Absolutely. John, do you want to add something to that?
You know what? I'm just thinking about, measuring the impact of your technology. It's not always about money and you can't always track it by money. But you know what? I think it has to do with, to that point, I think it has to do with sanity as well. And you know what, Chris, I'm going to plug LBA Ware right here because I know that you guys are winning awards all over the place for your technology. And I can just imagine, in my previous life, I was a mortgage loan officer. That's where I started my career at the beginning, okay? So believe me, when from what I know about your system, which didn't exist when I was an MLO, but anyway, the sanity, where it comes to managing all of the different compensation packages And I can only imagine having a specific compensation package and checking to make sure that I got my check was right, and going to somebody and saying, hey, I think it's off or something like that, and then just manually having to figure it out. And so I think that having the right tech stack is about sanity too. But anyway, I think we should jump over to, I think we should talk a little bit about the customer experience next, by having the right tech stack in place. There's been a lot of focus on the front end, the POS, and there has not been historically anyway, and that's improving greatly right now. But historically, there hasn't been a lot of focus on the back end of things, and profitability that lenders were expecting to see by focusing so much on the front end didn't really come to fruition, just because the back end wasn't completely in place. So I don't know, maybe that's a good, kicking off point right there, if you can speak a little bit to that.
I'll let you do that one, Stephen.
Oh, I thought he was talking to you, Chris, so I just kind of keeping quiet. It is a good segue, John, in that, the customer experience, you talk about measuring the effectiveness and the value of a technology. Well, your customers will tell you. If your customers are internal or external, they'll let you know whether your implementation is valuable or not, right? So enhancing the customer tech stack, or enhancing the customer experience with your tech stack, I'm losing myself where I should go with this question. Frankly, because I thought he was asking you the question, Chris. But
well, how about this? Let me take this for a second. So I too was an MLO in a previous life, and I had several different shops that use different systems. So I've seen kind of a run of gamut of different technologies that were available to me. So let's talk about the customer experience with technology. I was at a shop where everything was still very much, there was no POS, right? There was no point of sale system in-house. There was no online way for someone to upload documents to me. Everything was very much via email, through secure site, through in person. This is back, not that long ago. I'm not going to date myself too long, but not that long ago, I was taking apps over the phone on a pad on an old 1003, and that was kind of my life. And we had a lot of slowdowns, and our customers knew that, right? We actually had some pretty decent fallout for processes that were taking too long, because, and mainly on refis, not so much purchases. But you lose people in this day and age when you don't have something that basically keeps them top of mind, keeps them, in front of the process itself and lets them stay informed. Piggyback to another shop I went to that had a nice CRM, had a very nice point of sale system. And it was something where I could just see my efficiency gains were so much better. My communication to my clients was so much better. The systems were talking to my clients before I could. I mean, I like to talk to my clients, but the fact that it knew that they needed to be touched at a certain point in time, right? That's the efficiency gains, and my customers were reveling in it. I also saw then, from just the tech stack investments we had, or lack thereof, to the ones that we did have, our CSAT scores were going up, right? Our CSAT scores were higher there because people were having a better experience. So I think it does, piggyback down to what you have in-house. If you utilize it the right way and you actually take advantage of the solutions that your organization invests in, you can really make things easier for your borrower. That's kind of what I was thinking, Stephen.
Yeah, I absolutely, I would agree with you. One comment I'd make to that, and I think that I'm going to put this in context of what we could do better, right? What I could do better as we look at implementations. You're talking about that customer experience. Get from the customer what they want, right? So one thing I see happen on occasion is implementation of technology for things we think will make the situation better, but it's not what customers are asking for, whether that be an internal customer or an external customer. And we also, I've seen errors where we make these implementations and it has a secondary effect where we didn't think and didn't fully understand the technology because it affects different workflows and there's bleed over into other areas, right? So getting an understanding of what the customer wants, right? Whether that's your loan officer, I'd like to be able to automate these emails. I'd like to be able to text from my lead tracking system, and I want that to save in the lead. I want to be able to, you know, get rid of these mundane tasks, right? Getting that sort of information back, implementing that to improve their experience is very valuable. As long as we don't do things that we think are right and not fully understand the impact to our workflow and to other technologies and other customers in that chain. Right? Does that make sense?
Oh, it totally does. There's so many little nuances that technology solves for now. You brought up the word tasks, right? I know that's a big thing. And you've got RPAs and you've got simple, you know, I remember when day one certainty came out, right? And you had the ability for some of these things, like you can link your bank account. You can link these things at the front end level as a customer. And then I'm not getting asked, hey, you missed page 7 of 8 on your bank statement, or I need that blank page. Those are those little things that like seem minor, but they really kind of degrade the experience from the user. And I think that's kind of what we were going with there.
Yeah, in today's age, you know, I'll say something right now about where we are in this industry. It is an amazing age to be in the mortgage industry. The stuff that we have, the tools available. I mean, from, you know, picking up a phone because your dialer called somebody, if you're a consumer direct loan shop, and you're talking to them with their information on the screen. You get them to an app, they fill the app out, they go through Simple Nexus, it automatically pulls their their assets and their income, and it feeds it into the AUS, and clickety click, and it, you know, you're automatically sending out texts and emails, requesting documents. They know what they need, when they need it, they're reminded. That's powerful technology. Understanding your tech stack, right? So we talk about implementation and ROI. Do you know what your tech stack is? Does everybody I'll make this statement pretty boldly. I think probably there's very few people in any organization that know all the technology in their organization that affects their organization, right? They may have a glimpse and may have heard of some things, but they don't understand it. Not that everybody needs to, but those that make decisions should. So if I were to say one thing is we are rolling out technologies for our organization to make our organization better. Understand what we have, understand our business needs, and communicate with all the powers that be, and things will go better.
Love that. John, did you have anything you wanted to add in that sense? If not, I was going to jump to the next piece.
Yeah, no, I think that was very well stated, and I think that we should move on to talking about speeding up the ROI and price. You know, what are steps that people can take to really prioritize implementation and integration of technology?
That's a question.
Yeah, I'm just wondering, you know, I mean, how do you speed up the ROI? How do you speed up the ROI of that?
You know, it really is a great question. One, put priority on technology. A governance structure, whether it's a massively formal or informal, but having a governance structure where you're reviewing technologies as a group with all stakeholders, a representation of stakeholders. So you've got your ops staff, you've got your underwriting, your processing, you've got your executive group, you've got your sales group, you've got HR, you've got payroll, you've got different groups within an organization. Having them represented and having a governance group. And most organizations don't do this that I know of. I've worked for multiple institutions and I've tried to institute governance structures like this. It's often fought, right? Because it's construed as too formal. But if you have that group and you can create that group in a process that's palatable, it will go a long way to prioritizing, picking, rolling out, measuring, and modifying technology in an organization.
So like
and communication.
So like articulating, having all of the heads of these areas get together and being able to clearly define the benefits, all of the benefits associated with implementation that are strong enough, and maybe incentivize, maybe incentivizing these areas in such a way to gain leverage so that they have a lot of mental leverage, if you will, to get the to really get everybody into a position where, hey, this needs to happen, and it needs to happen in this time frame.
Yeah, absolutely. You know, there's a couple things that make these things work, this type of initiative work. One, it's got to have executive buy-in. If you don't
Yeah.
have executive buy-in, don't even, you're just banging your head against the wall. Two, you need project leadership, right? So you have governance, the governing board or group go yay, nay, and they ask questions and they lay out their requirements, and they establish prerogative, right? You have a project manager. That's somebody who owns it, right? He's a, let's say TK, the single kick, right? He's the one that runs, he coordinates, he communicates. Pardon my language, I couldn't help myself. But somebody to drive that technology. And you may have multiple project technology leaders, right? You got a guy that is going to roll out some lead management tool, Accelerate, for example, right? Well, he better be somebody who understands leads and lead management and all those tools and all those things that go with it. Somebody's rolling out Compensate. Well, that should be somebody who understands payroll and accounting and all and compensation plans. So you can have different people, but they all go up through the group. They all understand you have finite resources in an organization, financial, human, and otherwise. You need somebody to balance that and say, okay, we're running into a log jam. Let's push yours back and let's move yours forward because it's more important right now. Or we don't have the money to do all three projects. We're going to do this one because it's the one we want to do, right? And here's how we're going to measure the ROI, et cetera, et cetera. So if you want to do effective, if an organization wants effective technology rollouts, that's a value, and it's a value approach to do it. Most organizations still operate in pockets, and that's okay. They still roll out technology. Things still happen. It happens in our organization. We communicate well, but we don't have a centralized governance body. So we have different groups roll things out, and it's more informal. So
yeah, honestly, Stephen, you by way of virtue, as usual, you pretty much answered what my question was going to be in terms of like how a lot of things get delineated, the people, the process, you know, the sets up. But when I think about, like what you said, the resources and like the right person on that project, right? It's not just some project manager that I'm just giving it to that gets everything, even though if they don't really know anything about it, right? You need that SME or someone that can really enhance the process and say, hey, you know, like I'll pick on myself, right? Compensate in the sense that, you know, Sally from HR, she's really the only one that knows the plans, but she's not involved in this project. What sense does that make? Like we're doing this for Sally's benefit. Why is she not involved in this process? Same thing with like, you know, a point of sale system. Why are we not involving, you know, the branch manager discussion in this in terms of what they're expecting to do, or the sales staff, you know? So I love that you brought up the fact you bring, you know, heads together, you really assess what it is, and then you define which ones are priority. Because like you said, pains can come up too at different points. You may prioritize something today, and then a big pain pops up. You're like, well, we've got this thing on the backlog, but sorry, man, this thing is now more important, just by way of what's going on in the market today. Like I assume like e-closings and RONs and stuff like that last year, right? Like a lot of people didn't have that stuff that just like, okay, focus here.
Yeah, absolutely. Yeah.
Perfect. All right, let's go to the next one. The favorite one, maximizing employee adoption. So when it comes down to getting anybody and everybody in your organization, is it something where, and let me take this perspective, when obviously you might roll out to a select group or select beta, you know, instance of your users to see what it looks like. Is it something where you do define specific key individuals that traditionally have a habit of buying in on technology and saying, these will be my advocates and my champions, you know, much like we do in the tech side of trying to get people to buy our products. It's who's the champion, who's the advocate, who can we help get this done internally. Do you identify that? Is that something you utilize in terms of trying to get adoption to everybody because they see someone else they like doing it too?
I think it depends on the technology that we're talking about. If it's a technology request that comes from the field, it's pretty easy to get adoption, right? If it's a technology that's new from concept, now I'm going to roll back. I'm going to use your company as an example. Right? When I rolled out Compensate for the first time to this organization, payroll is one of those things people need, expect, and don't want to be bothered with. And it's a change, and I'm fine. I'm fine the way it's going now, right? So you've got to get somebody on board. So the way I approached it, I'm like, who's the biggest shot? Who's the most vocal shot? Now I'm going to go talk to them about the value proposition. Who's got the ear of the executives the most because their volume is the greatest? That in this business, that's the man with the biggest volume has got the biggest mouth. So, or he certainly has more ears, right? So, you go to them and you talk about it, you work the proposition in, and you talk about the value proposition to that leader. And then you put them at the top of the list. And then when you roll that out, I believe in kid gloves when it comes to technology rollouts. I've seen it many times where we roll out technology and we just like, okay, it's launched, an email, right? And nobody's using it. And people are baffled. Well, I sent the email last month. There are a couple things that are important when it comes to rolling out technology. First and foremost, an advanced marketing campaign is very helpful, right? So here's what we're going to do. We're going to roll out Simple Nexus, and this is what Simple Nexus is going to do for you. Here's 3 days. We're going to have a demo for Simple Nexus. Please join us for the demo. Send it out to everybody. Next month, okay, we're a month in. We're a month into the process. We're a month out from deployment. Here's an announcement on Simple Nexus. Here's the value proposition. Here's what you're going to need to do. Next one, a couple weeks out. Here's the time frame. We're getting ready to roll out. Here it's coming. This is what's going to happen. This is what we need from you. And then you even pick up a phone and call people. This is a really novel technology. Talk to people. Let them know what's going on. Get their buy-in. Here's a secret. You communicate to people and then don't hear back. That's a bad idea because people don't always pay attention. Honestly, how many times have you had people on webinars that weren't really paying attention, right? How many times have I been on a webinar and not paid attention? Let me be honest. It's happened. Take an email. We'll do somebody call me. I'll put it on mute. So following up with a phone call and going, hey, did you understand? Do you know what you need to do to the leaders at a level pays off dividends. And then once you roll it out, and then you call them and you email them and say, it's rolled out. This is what we expect to see, right? And if it's a transition technology, meaning we're moving from this technology to this technology, we see here's the transition life cycle. And at this time frame, we're going to cut it off. So we're on cloud computing in our organization. And we moved from a server data center to Azure cloud. And I migrated in groups and I called the managers. This is what's going to happen. This is what the value proposition. It's going to have higher reliability uptime. You're going to have faster speeds. It's better. Walk through it. Okay, we're making the change. We made the change. Hey, we made the change. I'm cutting off access to the other resources in 2 days. Get everything you need moved over that wasn't automated. That you got to move over yourself because we're cutting you off. Or you're cutting you off. And then we cut them off. And we had very few complaints. I won't say none because people don't pay attention in all cases. And that's just reality. But we mitigated a lot of the challenges in those situations just by getting people involved, a marketing strategy up front, communicating with them through the process, and then letting them know once it's done.
Yeah, Stephen, I agree with you completely. I think that's awesome. As a marketing guy, I am completely on board with the marketing campaign and letting people know, here's what's going to happen. and here are the benefits to you, making sure that people understand what the benefits are, having an open door to answer questions, and making sure that everybody actually gets it. Yeah.
Well, let's,
Good points.
we got one more, I think, right? We got one more. And for the sake of everyone's time, your time, my time, everyone's time on this webinar, which again, thank you for joining us today. Establishing ongoing measurement improvements. We've kind of touched on this a little bit. So when you do go back and you reassess things, as you know, people sign terms, right? Your contracts come up, like you said, you transition from something to the next. When you're looking at something, if I'm even considering some type of transition, obviously I want to realize, is the system improving still? Are they doing ongoing improvements? Are they doing things that my people keep saying, we love this system, but I wish it would do this, but I wish it would do this. Are they listening to me? I assume those are all things when you consider establishing value with whoever you partner with. Doesn't matter the company, whoever it is. Do they listen to me? Do they give me support? Do they answer the phone when I call them? I assume those are all big things when you talk about establishing ongoing improvements and measurements.
Yes, that's a great topic and question. How do you ensure that your systems are moving in the right direction and satisfying needs? All the technology partners, I implement technologies typically with partners like an LBA Ware, or the group I set up Power BI with that hosts our Azure data lake. So one thing that's very important is choosing a partner. I mean, that's part of the selection process. When I select a product or technology, I look at the product and its value. I look at the cost. I look at the vendor. That's important, because if a vendor is not sophisticated, does not have the same value system that I have, is not going to communicate with me, is not going to be responsive like I want, then I won't be happy. That does affect your measurements. But I'd like to take a different look at that point of ongoing measurement, and that's, here's the reality. We don't know what we're deploying. It's new. So by very nature, if I'm deploying a technology, I don't know that technology. You can tell me about it as the vendor, but I don't know. I don't know I don't have the experience that you have. You don't know my world, and I don't know your product, right? So whenever we implement something, we're going to learn, oh, well, okay, this is a little different than I thought. And I'm going to take an example of something we rolled out. 5.9 a dialer, right? We were on Velocify, click dial. Great product. I love Velocify. It does some things very well. Does some things not so well. But it's been good for us. But it's that whole click process. So to increase efficiencies and effectiveness, we implemented a dialer system, 5.9 dialer. But in doing so, I lose some of the measurements that I had with my click dial, right? I don't know how many dials are happening. It's harder to get to my connects and understand what's going on. I don't know. My measurement process is different, right? So I've got to evolve what I measure, right? I've got to evolve what I consider success, right? So, now in this instance, we went and changed from, number of calls and talk time to the way the dialer works. You're getting so many connects, but you're getting so many voicemails, right? So now I'm looking at talk time to credit pull. So I'm measuring completely differently than I was measuring in the beginning, because I didn't understand my technology as it pertains to my operating environment. So, it is a never-ending process. The minute you stop measuring and you go rote use of your technology is the minute your technology starts to decline in your environment. Because one thing I'll say about this industry and most industries, it's ever-changing. It's dynamic. We got regulations that change it. We have other technologies that change it. We have an economy that changes it. We have a plethora of things that change how we operate and our demands on our people. So yeah, never stop measuring, never stop evaluating, never.
So true. All your points are so true.
He did. He's just like, boom, end it. Yeah, John, anything you want to add there? I thought that was great.
No, I have nothing to add. I thought that was excellent.
All right. Well, I mean, that's really it for us in terms of all the things that we wanted to discuss. So if you have any Q&A, I'll turn that over to
Yeah,
John.
I'm looking over here. I don't see any audience questions in the chat room over here. So with that, look, I want to thank everybody for attending today. Thank you very much, Stephen and Chris. You guys killed it. I appreciate you both. And we'll see everybody for the next webinar.
Thank you. Make your world a better place. I'll talk to you.
All right.
Love it. Thank you
See
all.
you guys.
Cheers.
Bye.